So, good evening, and thank you for joining us at this exclusive interview with Simon Zutshi. I will be your host for tonight's interview. And so, a little bit about me. I'm Greg Piskazip. I come from corporate background, which I've left to set up my own electrical business. And for the last 2 years, I develop and invest in properties. And actually, that was with your help, Simon. So, Simon, please, if you could introduce yourself.
Hello, Greg. First of all, thanks so much for asking me onto this live session. So my name is Simon Zutshi. I've been investing in property myself since 1995, so almost 3 decades. And I, managed to replace my income, left my corporate job as well. And in 2003, I'd done okay by then, but I found it quite a lonely journey. So I went online to some sort of property group, and this was before webinars, before Facebook, before YouTube. If you can imagine any of that, it's a very, very lonely journey, and there was no groups or no help. So back in 2003, 20 years ago, I set up the very first property networking anywhere in the UK for property investors. And I called it the Property Investors Network. It was just one meeting. We now 50 meetings around the country. So we're the longest running and the largest network of investors in the UK. And at that time, I started to teach other people how I had replaced my income. And I realized that's actually what I love to do. That's why 20 years later, I'm still teaching people. And I guess that's quite important because we're going to talk later about the market and what's happening and is now a good time to invest or not. But I am probably the only trainer in the UK who has been consistently training for the last 20 years. That means I'm very well aware of exactly what you need to do in this falling property market. Whereas most of the other
trainers before, haven't you?
I've seen it before. I've been there. I was doing it. I was teaching other people. I was investing at the time. Whereas most trainers haven't been investing that long themselves, let alone teach. So they just don't know what to do in the current market conditions. So I have a bit of a competitive advantage. The other thing, Greg, that I have an advantage is because of this network of meetings around the country, I've got my ear to the ground. I really know what's happening at a grassroots level all over the UK before anybody else, before the media, before anybody. So I have a bit of an insight. There's a bit of a unique perspective on what's going on. I then wrote a book called Property Magic. It's an Amazon bestseller. We've sold over 100,000 copies. Probably the most read book about property in the UK. And it's in its 6th edition right now because the market keeps on changing. I probably need to do a new edition next year, maybe. And it's all about, and some of this we're going to talk about in here actually, is how to work with motivated sellers. So people who need to sell a property. And if we can find those people and help them, we're not talking about taking advantage. We're talking about helping those people. We can pay less for the property, or they might be flexible on the terms, which means we don't have to use as much of our own money. We're going to talk a little bit about that again today, how you can acquire property using not very much of your own cash. And interesting, Greg, when I wrote this, it was at the back end of 2007, just when the market was starting to come down. And
interesting times.
It feels very much like what's happening right now, and it's still very, very relevant. So that's a little bit about myself. One final thing. So I'm still actively investing. I have a year-long mastermind program, which obviously, Greg, you've been through. And in 2013, I set up a business called Crowd Property, which is a multi-million-pound business now. It's supported something like 750 million pounds of developments in the UK. I'm not active in the company. I'm on the board. I'm the major shareholder, but I have a team running. So I know a lot about lending and borrowing money as well. So again, some unique perspectives that not many other property trainers have.
And this is where we're going to come to actually, during this interview, because some people are still logging to this interview, and the purpose of this this interview with Simon, with yourself, is to tell people what they could expect from our event on the 30th of September. And this is what a lot of people, like you said, there's a lot of trainers available, in the UK and abroad and overseas who train. But not a lot of them been consistent for the 20 years, and not a lot of them does remember and been investing at the last market crash, which was 2008. And so we've got a great opportunity to learn from you here today.
Great.
So the subject of today's interview is the how to buy property without using your own money. So there's and what's currently on the market is is the mortgages, the mortgage acceptance rate is actually falling. And there
Yes.
will be a reason for that, but actually the property prices are not falling equally with the market acceptance rate. What do you think about that? Why is that?
So, okay, there's a couple of things. So, for the last 12 years, really, we've had this rising property market. What you need to understand is in the UK, because we live on this island with a limited amount of accommodation, the long term trend for property prices and also rental income is up. It's a supply and demand thing. We're just not making enough, building enough houses in the UK. We need about 300,000 a year. We normally make about 200,000. This year, we'll be lucky if as a country we make 140,000. So there is a shortage. However, all markets are cyclical. They don't always go up. They don't always come down. They kind of go up and down. And so what's happening right now is a price correction. We're seeing prices come down. I don't think we're going to see a crash like we had back in 2008. It's very different circumstances back then. But suffice to say, it was what we call a seller's market, where there are more buyers than there are sellers. So every seller had buyers queuing up to buy property, particularly during COVID. And the reason is there were some massive incentives by the government. There was they got rid of the stamp duty, to put a stamp duty holiday in place. They were printing all this money. They were giving people bounce back loans and simple loans that were supposed to be used in businesses, but I think a lot of that made its way into the property market. So we had this unexpected boom in property. And now that's tailing off. And it varies around the country. But in most parts of the country, sales are certainly slowing down. Sales are falling through because of what you said, Greg, about finance being an issue. Did you know 1 in 3 sales falls through in a normal market? I think we're going to see something like 1 in 2 sales fall through here. So people who want to buy property are actually struggling to do it. And so to sell property, people generally, they bring the price down. So in some areas, we're seeing prices drop quite a bit. I think the nationwide published figures saying in July, prices were down 3.8% based on the kind of where they were back in a year ago. So
those falling prices, actually, Simon, sorry to interrupt, but those falling, except the mortgage, is that a good thing for us sophisticated investors, or is that the bad thing?
So no, so it's a good, if prices are coming down, it's a good thing. And I'll tell you why. First of all, if you're already investing, you'll know this. It's been hard to buy properties that what we call stack up. And what we mean by that in Property Magic, my golden rule number 3 is we only ever buy a property that makes us money. So at the end of the month, when we take off the mortgage, the insurance, the maintenance, the management, because by the way, I pay other people to manage properties for me. I don't want to be a full-time landlord. There should be profit left over. And with the high interest rates we've had and the high purchase price, it's been very difficult to get properties to stack up, particularly single let properties. There are some other strategies such as HMOs, house of multiple occupation, where you rent out individual rooms, and serviced accommodation where it's very short term. Those 2 strategies in particular work very well right now because they're very high cash flow still. But single lets, where you might rent to a family or a couple or an individual, they're hard to make them stack up. But with prices coming down, obviously we can buy properties for less now than we did maybe last year or the year before that. And here's the really important thing, Greg. When the market's coming down, sellers are obviously nervous about that.
Of course.
And particularly people who've been in the game a long time, as I have, and they remember the crash back in 2008. So they might be prepared to sell a discount now in order to get rid of the property before it falls much further, because they might be worried about that. So when the market's coming down is actually one of the best times to negotiate a discount rather than when it hits the bottom. And everybody knows it's hit the bottom, including the general public, including the media, buyers and sellers, because at that point, the sellers have the hope and the expectation that someone will come along and pay more for their property. So they're less likely to negotiate. So as long as you know what you're doing, Greg, when the market's coming down, actually, it's a really good time to be buying.
Exactly. A lot of people actually don't know that. And so some of the vanilla investors, they would think like, it's not a good time. Let's wait for the market to improve. But at that point, you'll be too late.
Yeah, exactly. And look, there's always deals everywhere. But here's the point: there's not much competition because exactly what you've just said, Greg. Most
Mm.
amateur investors and even some experienced ones are standing by the side waiting to see what happens. So it's now become a buyer's market. That means there
Yes.
are more sellers than there are buyers. This is why now is such a good time, as long as you know what you're doing, to be acquiring property. And I just want to relate that because sometimes people say, okay, Simon, I understand that. I know you can get a good discount, but what if I was to buy a property now? If I buy
Yes.
a property now, in 6 or 12 months later, it could be a lower price. Does that mean I've lost money? Well, no, not necessarily. If you buy now and sell in 6 months and the price is lower, yes, you've lost money. But if you follow the
Mhm.
golden rules, again, that I've talked about, and I will explain these at the event we're doing in Heathrow at the end of the month, if as long as you're making cash flow, which we only buy it from its cash flow, and as long as we know
Absolutely.
we can rent it out and we're holding long term, then it doesn't matter what happens short term to prices. So if you find a good deal today, buy it today. The other thing is, Greg, sometimes people say, well, I see this house I like, but I'm going to wait because if I wait long enough, I might be able to buy it for a lower price.
Hmm.
That's a bit like, let's say let's say it's coming into the winter time, it's November, and you think, I need a new jacket. So you go to the shops, you find a jacket, a lovely jacket, absolutely love it. It's quite expensive. You think, well, you know what? I could buy it now, but if I wait, I'm not going to buy it now in November. I'm going to wait until I've got until the sales come in January. Then I'm going to be able to buy it at a discount. Well, the problem with that is you wait until January, which means that you haven't got to use it in November, December. You got really cold, but also in January when you get to the sales, guess what? That particular coat you want might have gone. Someone else has snapped it
Of
up,
course.
and all they've
It
got
was
is the big ones or the small ones, which doesn't fit. So if it works for you today, if the coat fits today, buy the coat today. Don't worry about the value in the future because you're going to have years and years use of the coat, and you're going to have years and years use of the property you're buying. Does that make sense?
absolutely. Yes, it does. Simon, you, as myself and my audience, we often come across your videos on YouTube, and we know you've mentioned a couple of times about the no money down strategy. What I would
Yes.
like you to do is, I would like you just to give us a hint of what this is actually, but don't tell everything. Because
Okay.
that would be the secret, we
Okay.
can't give everything away, but that would be why you might want to join us on the 30th of September at Asbiro Investors London meeting. So,
Okay.
what is all about no money down strategy?
So before I explain, I need to go back a little bit because I know we might have some people who are experienced, might have some people who are completely new here. Let me
Mhm.
explain a few basics. So when you're buying your own home, your residential property, you typically put down a deposit, maybe 5 or 10%. Then you get a mortgage for the rest. And
Yes.
obviously, it's based on your affordability. You've got to be able to afford to pay the mortgage, obviously. And that's a struggle for some people now because the rates are so high. When you buy an investment property, a buy to let property where you're not going to live there, you're buying it to let it out to someone else, you have to put in a much bigger deposit, normally 25%, and get a 75% mortgage. Okay.
Indeed.
Now, the problem with that, and then people, they use savings, they use inheritance, they use money from the business, from their pension, they use that as deposits, equity, and other properties to buy property. But here's the point, Greg. At some point, everybody runs out of their 25% deposits and they think they have to stop buying. So there are a number of different things. I'm going to touch on a few of them, and I'm
Mhm.
going to give you a little bit of a clue of the main one I'm going to be talking about when we go to the event that I'm speaking at for you at the end of September. So, first of all, let's assume you're buying a property and it does need 25% putting in. Well, who says it has to be your money? You see, if
Exactly.
it's a really good deal, and here's the caveat, you've got to know how to find good deals. And what I
Hmm.
mean by that is giving really good cash flow. Maybe you're buying at a bit of a discount. Maybe you can go and find someone else who's got the money, but they don't have the time, the knowledge, or the inclination to go and find deals themselves. And there are two ways you can work with other people. One is you can borrow money from them, and they give you the money to put into the property, and you own the property, but they get a fixed return. And you think, well, why would they do that? Well, basically, we can help other people make money. They're not making much money in the bank right now, and we can give them a higher return than they get in the bank. And obviously, you need to know, like, and trust people for them to give you money. But there will be people who are watching this, who I guarantee
Mhm.
there'll be some of you know got money in the bank doing nothing for them right now. So that's a simple thing. You could do a loan. Okay. Now,
Yes.
that's the first step. The other thing you could do is what we call a joint venture. This is where it's more than a loan. It's a bit like going into business together. So, Greg, let's say you find a property deal and I've got the money, and we say, look, let's work together. We'll form a business together and we'll buy this property, maybe many properties over the years. And you do the work, Greg, and I'll put the money in, and then we'll share the profit. We'll share the cash flow. We'll share the extra growth. But we also get to share the risk as well. If things go
Mm.
wrong, we share that together. Whereas if I just did a loan to you, well, it's your loan. If things go wrong, that's your fault. You got to pay me back. Okay, so there are pros and cons of private loans and pros and cons of joint ventures. Okay, and that's assuming we're just buying the property. Now, let me take that a step further.
Mm-hmm.
Maybe the person who lends you the money is the person who's selling the property. It's
So,
what we
hold on, just to make sure that everyone understands, because this is mind blowing. Hold on.
yes.
So, just to put this into perspective, I know what you're saying, but someone who's not into the property might not know. So, hold on, just imagine that you buying a property from me, and I am giving you the money, or
Okay.
the or
Let me
go
explain
on.
that. So, Greg, let's say you've got a property. You really don't want this property anymore. You want to get rid of
No,
it.
I'm tired. I'm just so tired. Don't want tenants,
Tired.
no properties ever.
You don't want the hassle. You don't want the fun. Now, in this falling market, Greg, if
Hmm.
I was to buy from you, I'd probably want to try and get a discount, right?
Of course, I get it. Yes, it's
But
tough.
as a seller, you probably want as much money as you possibly can from your property, right?
You know me, Simon. Yes.
Of course. Well, you're like every other seller, or it's most sellers. Okay, Greg. So
Yeah.
you've got this property. You really don't want it. You want to get as much as you can for it. Is it going to be easy for you to sell it right now, Greg?
No way, because I want the top dollar for it.
Of course. So that's one problem. Also, even if I wanted to buy your property, I might struggle to get the mortgage on it right now because it's difficult to get mortgages, right?
Yeah, but I've been struggling to sell this property because it's been on the market for a really long time.
Okay, so here's the thing. What everyone needs to understand is
Hmm.
remember, everybody's different. And we need to be very careful when we speak to a seller that we don't make assumptions. Okay. So, in fact, about 25% of property in the UK has no mortgage. So let's imagine, Greg, you're a landlord. You've been doing it for years and years. You paid the mortgage off many years ago. You were
Absolutely.
making good money for this. Now, if you sold this property, Greg, would you continue to make any rental income from it?
No way. It will be sold.
No,
That's it. Gone.
you'd get a lump sum instead. And what would you do with
Mhm.
that lump sum?
Well, put it that way. If I wouldn't be a sophisticated investor, I would possibly just put it in the bank and
Yeah,
just go and enjoy the life.
yeah, because you're retiring, you don't want to buy any more properties, you want to get out of the game, right? So again, all of these things they work in certain circumstances. We need to use the correct tool in the right circumstance. So let's assume, for Greg, has got this property, he really doesn't want it, he's fed up with it, he wants to get the best possible price, he's just going to sell it, put the money in the bank, he's not going to get a great return. How about this, Greg? How about I say, I'll tell you, I will buy it at the full price. I'm not going to haggle or try and negotiate. I'll give you the full price. The
Oh, I
problem
like
is
that already.
the problem is I don't have all the money to do this, Greg. Now I
Okay.
understand that you're just going to put the money in the bank. So why don't we do this? Why don't? And by the way, there are several different ways of doing this. I'm just giving just one right now. Okay.
Okay.
And this is for someone who doesn't have a mortgage. So we say, okay, what we're going to do, you're going to sell the property. I'm going to give you the full price. It's going to go through a land registry at the full price. I'm going to pay the stamp duty I need to pay when I buy the property. But I'm not going to give you any money now, Greg. What I'm going to
Mhm.
do is property's going to come into my name, but I'm going to give you a first charge on the property. A bit like a bank. If I had a mortgage, a bank you'd give them a first charge. So I'm going to give you a first charge, and we're going to put a loan note in place that says
Mhm.
I still owe you all of the money from the purchase of the property. Okay.
Okay.
And if you sold the property and put the money in the bank, you'd be getting a certain amount of money. I'm going to make sure that I give you more money each month than you would get if you put the money in the bank. So if you think about it, Greg, it's a bit like you selling the property, getting rid of all the hassle, but still getting an element of rental income from the property with no hassle. How does that sound?
Okay. So just to summarize, just to make sure I get it, everyone else who's watching and get this as well. I really don't want this property. I really want to move on, retire, and just travel the world. and
Yeah.
that property really bothers me. But I don't need the money to buy another one. So from the sale, I'll put the money in the bank at what, less than 1% return.
Well, you might get a
Maybe
bit more. You might get 2% now, maybe.
make it 2%. Okay, but then I would, I would transfer the property into your name, and you would give me a monthly income on that property, so we
Yes.
can use the property.
Yes, I get to use it. You have no
Mhm,
hassle. Okay. And then instead of getting just 2% in the bank, I might give you the equivalent, I might maybe 4% a year. So you might get
mhm.
double what you get in the bank. I still owe you the money for the property. And what I'm going to
Yeah,
do, I'm going to give that to you in the future. But a lot of people say, well, I'm getting a really good return. I'm quite happy to leave it there for a while. Yeah. And the
yes.
way you get it back is we'd refinance it. But you've got security. If I ever didn't pay you, you could get your property back. Okay. And in the meantime, you're making more than you would make in the bank. So think about this. You've not had to sell at a discount. You're staying at the full
Mhm.
price, and you're getting a bit of extra rental income profit every single month without any hassle. If you add up that profit for a number of years, you're actually going to be getting more than the value of the property from the sale with no hassle. Does that
So
make sense?
that's kind of, we both investing. You're investing in the property, and I'm investing the value of that money over the time because I'm getting more.
Exactly. Yeah. Better than leave it in the bank, and you still got the security of the property. Now,
And
just explain that.
yeah,
So so that's if there's no mortgage. If there's a mortgage, we have to do it a different way. We don't have time to go into that. One
of
thing you need to
course.
understand is you can't do vendor finance with a traditional mortgage company because they want to see you put some money in. But you
Sure.
can do it with bridging companies and companies like Crowd Property that I mentioned earlier as well.
Hmm.
So that's another way of doing it. And then I'm going to give you just two more thoughts here. One is, what if it's a property that you don't want to keep? Greg, you're an electrician. I'm sure you've seen properties where you can buy them, you can do them
Many
up
of them.
and sell them on for a profit, right? How about this? Rather than buying the property, maybe you joint venture with the owner and
Hmm.
you bring the money in to get the work done. And I can show you how you can do it without you putting your cash in. The Crowd Property could help you, for example. So the property gets done up, you sell it, and the owner gets more than they would have got if you'd bought it before the work. You haven't had to put any of your money in, and you get a share of the profit. Again, that's another way you can profit using none of your own money. And I got one final thing to tell you. There is a strategy. Well, it's actually more of a tool, to be honest. It's a tool
Okay.
that you can use where you can control property. You don't own it, you control it, which means you can rent it out, you can get cash flow from it, and you can actually get monthly cash or monthly profit and capital growth on a property that you don't even own. It's a
That's
very
mind
special
blowing, Simon.
strategy. Sorry?
That's mind blowing.
It
Yes.
is. And that's what I'm going to be teaching at the end of the month. Now, let's show you how you can apply this. Maybe you are renting at the moment. Maybe you don't even have your own home yet.
Hmm.
I can show you how you can go and move into a property and you've got the right to buy this property in a few years' time. In the meantime, you rent it. So you're getting the capital growth on them. Now, short term, next year or so, markets are going to come down a bit. But because of the supply and demand, we expect at some point it's going to come up again. So if you've got a long enough period, you can get your foot on the ladder. You can move into a property. You got, as long as you pay the landlord each month, they can't kick you
Hmm.
out. You got the right to stay there, and then you got the potential capital growth. So that's one way you could use this. Or you pick up a property you can rent to other people. You pay the landlord a certain amount of money each month. You rent it out for more. So you make a profit on the difference between two. Now, you might have heard of a strategy called rent to rent. It's similar to that, but it's better because you also get the right to buy. With the rent to rent, you give it back to someone in 3 to 5 years. In this case,
Yes.
you get the right to buy if you want to buy it, or you can pass it on to someone else. It's an incredibly powerful set of tools that I'm going to be sharing, explaining exactly
And
how you can use them.
And that's exactly the reason why, if anyone who's watching this now live or replay later on today or tomorrow, these are the reasons why you should join us on the 30th of September. The links is in the comments below. Please follow the link. At the end of this interview, we'll be sharing a discount code with you. And so just stay till the end if you could. And what we will have a few minutes for any questions in about 5 minutes' time. So if you, audience, have any questions, please put them in the comments. and this is your unique opportunity to ask Simon a question and get your answers. This doesn't come very often. Trust me, I'm so privileged to have you all live today and available to anyone. God, people
Anyway,
don't
yeah.
realize.
There's no such thing as a silly question. And
Yes.
very often people think, oh, I've got a question, but I'll just wait and see. And then no one does a question. And then suddenly loads of people put questions in and we don't get around to answer. So put a question as soon as you can and we will answer as many as we possibly can. I'll let you pick out ones, Greg, that you think will hopefully help most people who might be watching this.
Absolutely. Well, thank you very much. And also, Simon, just also touch on this. So, all of these strategies that we just mentioned today, briefly, some of the tools that we call them, what are the challenges? What is this? What is what's the thing that we need to watch out for as sophisticated investors? Because obviously, that's not a normal standard. Here is the money deposits, there's the mortgage, and here we go, we'd like to buy your property.
Yeah.
So what are
So
the
look,
challenges?
yeah, so there's nothing wrong with investing in the traditional way, putting in a deposit, getting with nothing wrong with that at all. But the point is, as I said, most people run out of money at some point. And so if you're happy to stop and wait for the values to go up over time, then you could remortgage and go again. You could do that or earn more money and put money into it. You can absolutely do that. But these creative strategies allow us to do more deals much, much quicker as well. I mean, the one I've just talked about where you can get cash flow and equity growth without owning a property means that you don't need to get a mortgage, which means once you found someone who's prepared to do this, and that's one of the tricks, obviously, then you could do the deal in 3 to 4 weeks. Whereas if you're buying it, it would take at least 3 or 4 months. So these are very, very quick. So anyone who's joining this event, if they take on board what I say, they could be acquiring properties to give them cash flow even before the end of this year. That's how powerful it is. So what are some of the challenges? Well, here's the first challenge. Sometimes people think they know about these strategies. Oh, I think I've heard about that. But I'd suggest unless you've actually done one, you probably don't know enough. So one of the challenges is we allow our own beliefs, our limiting beliefs to get in the way. People say, well, I've read on Facebook you can't do that. Well, you've got to be very careful who you listen to these days. There are a lot of people, everyone's got an opinion, and some of them might be right, some might be valid, but some are not. So what I'm talking about, what I'm teaching is not just theory, it's practical things that and many of my students have done many, many times. And I'm telling you, in the falling market that we have right now, as we did back in 2008, where finance is difficult, these kind of creative strategies are going to become more and more relevant. So one of the other dangers is, first danger is questioning, well, is that really true? Well, yeah, just believe me, it's true, it happens, and I can prove it to you. The other thing is sometimes people watch a few little YouTube videos, think, oh, I know how to do this, and they go and try and use a tool like I've just talked about when it's not actually appropriate. What you need to understand is we've got all these different property investing tools we can use, but we need to use it in the right circumstances. There are many circumstances where what I've just suggested isn't appropriate. But if you try and use it, you're going to get no, 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 no from all these sellers. So one of the biggest challenges that investors face is only having a little bit, a limited amount of knowledge. They don't know enough, and they basically go and mess it up. They don't know how to explain it to people. They don't really understand it themselves. And so they mess up what could be a really good deal because of lack of knowledge, lack of education. The good news, Greg, at this event, I'm going to give people what they need to know to actually understand this and identify these opportunities. They can start to go out.
And that's exactly how important the knowledge is, Simon. I can see behind you. You've got the banner that says 1 million property portfolio and 50K income in just 12 months. So the knowledge is great, and as you said, the challenges is. Your favorite saying is knowing a little bit is scary. What was the saying?
So a little bit of knowledge is very dangerous. A little bit of knowledge is very dangerous. And another saying, which I think is a good one to think about, is you don't know what you don't know.
That's right.
Okay. Look, Greg, I've been investing 28 years now, and I've done pretty well over that time, but I've also made lots of mistakes. And I've got a number of properties in my portfolio, which at the time I bought them, they seemed like a good deal based on what I knew at that time. What I know now, which is more based on knowledge and experience, some of those properties, if I had a second chance, I wouldn't buy them again, even though they seem like good deals at the time. So everyone watching, even if you're already investing, you've got something, so you might think, yeah, I know what I'm doing. I'd really encourage everyone to have a very open mind, because you don't know what you don't know.
That's correct. We do have a first question. So, Tomasz, it's a different subject, but actually, let's go. So, how is Section 24 affecting rent-to-rent strategy in England? That's a very good question. Simon,
Okay,
what's your thoughts?
let me give you a little history. So, Section 24
Yes.
is something which was introduced back in 2017, April 2017, and it was phased over 4 years. And basically, it refers to a change in the way that we as property investors are taxed. Now, prior to that, it always used to be the best way to own property in your own name. And that was most tax efficient. And that's how the 2 million or so landlords in the UK, that's how the vast majority of them own property. By the way, most of the landlords only have one property, and a small number of them have lots of properties. Okay. In your own name was always the best way. When they introduced Section 24, it basically got rid of some of the tax relief on the interest. What that means is you can't offset all of the interest charges against your income in your property business. Now, it's a bit unfair, really, because every other business, if you have an expense, you're allowed to offset it. But the government said, well, you can't do it in your property business. So
Yes.
if you own property in your own name, and if you have mortgages, which most landlords do, and if you're a higher rate taxpayer, which not all, but many property investors are, certainly once they've been investing in property, they become a higher rate taxpayer, you pay more tax on your properties. If you're a lower rate taxpayer, you're not affected. If you own the property in a company, you're not affected. It's if you own it in your own name with mortgages and you're a higher rate taxpayer. So this is one of the reasons, Greg, that many people over the last 5 or 6 years have been starting to sell up their properties, because they've been paying a lot more tax. And particularly with the interest rates going up right now, you've got some people where the mortgage interest for some people is higher than the rental income. So they're not actually making any money every single month. But because of Section 24, at the end of the year, the taxman's going to say, oh, I want my profit. I want the tax.
Exactly. It
So
seems like they've got a higher revenue, but actually the income is much less because
correct.
the tax benefits are not there.
That's it. So this is one of the many reasons why we're seeing so many more landlords selling up. Now, some landlords are putting properties in a company structure, so they're not affected. People buying now, so someone could buy a property now, and they put it in a company, and they can actually make more money than the landlord who's currently operating it in their own name. So that's why it's still a good time to get into property. So that's what Section 24 is. Now, if you are looking to take a property on from a landlord, maybe let's say you own the property, Greg, in your own name. I want to take it on for you to take away the hassle. I'm going to rent it out for more money than I pay you. It's called rent to rent. Okay. Or this other strategy where you actually get the right to buy as well, which I'm not saying too much about today, but I will at the end of the month at the event I'm speaking at. I take that property on, but you still are affected by Section 24. So you can't get away from the tax. Now, I don't get affected by Section 24 because I don't own the property, but you as the property owner do. So just to be clear there, you can't get away. Now, what you can do, Greg, you could take your property and you could turn it into what's called the short-term rental serviced accommodation. And that's seen almost like a business, so it's not affected by Section 24. So you could turn it into short-term rental, give it to me to rent out on a rent-to-rent basis. You're not affected by Section 24, and I'm not affected by Section 24 either. So there are some ways around it.
I will be then working as your agent or property manager, renting the property from you effectively.
Yes,
and that will be a business now.
Yes, correct.
Okay.
There's some intricacies around there. It's best to get personal advice from a property tax specialist, but I'm just giving you I'm not giving you advice here. I'm just giving you a general education to make you aware of opportunities. And this is just a great example of you don't know what you don't know. And Robert Kiyosaki, who I'm sure you've heard of, is the author of Rich Dad, Poor Dad. And a lot of people tell me they read Rich Dad, Poor Dad first. They kind of realize actually having just a job might not be such a good thing, and they understand about assets and liabilities. And they say that Rich Dad, Poor Dad doesn't really teach you much about property. So a lot of you then go and do my book, which then fills in the gaps that they've got from Rich Dad, Poor Dad. So in that, Robert Kiyosaki, the author of Rich Dad Poor Dad, he says, what you know will make you money. So specialist knowledge will make you money, and what you don't know will cost you money. And that's not just about making mistakes. It's all about opportunity cost. There might be a fantastic opportunity in your area, on your street, but if you don't have the specialist knowledge, you're not going to know what a great deal it is. That's why investing in yourself, I always believe, is the very best investment you can make, followed very closely, of course, by investing in property.
And this is amazing reason why all of you should join us at the 30th of September. There is plenty of other events. We've got a great speaker. So Simon is one of our, exclusive guests of that night. And thank you very much, Simon, for agreeing to come and speak at our event. So if you fail to recognize the value of this interview, and so this is like, just a hint of what's going to happen on the 30th of September. And so this will be an introduction to what Simon is offering as a trainer, as a mentor, and as a coach. Simon, thanks, because I've learned from you, and I've got a wealth of knowledge, and we're already implementing this. So we're cracking another property, and I can't recommend it enough. So if Simon, we would like to. We don't have any other codes. Any other questions in the chat. But what we do have in just the chat, we've got a discount code, which is Simon10. And let me allow to just explain to audience what does it mean. If you use the discount code Simon10, you'll get a 10% discount. But that's not the end of it. We as an organizer, we will match the 10% that we will give it. We're reducing your price. We will give another 10%, and we are going to donate this to a charity. So it's a great cause, guys. You're not only going to learn from the best in the market, best in the trade, best in the market, with the wealth of knowledge and the years of experience, but you're going to be helping, the charity in a great cause. And it's about decision making. Decide what you want to do. And if that's your moment to come and learn with us, please come and join us.
You know what, Greg? On that note, I would say that, in the market, with all this uncertainty, price coming down, I can understand why a lot of people are scared. They're worried about, is it a good time to invest or not? And there are a lot of people who think about investing, but because of fear, understandably, they don't do anything. And they'll sit back, they'll wait, and 3-5 years later down the line, they'll kick themselves because some people they know might have gone to this event, learned exactly what to do in this kind of market from me and the other speakers. And they've gone out, they started acquiring properties, sometimes using very little of their own money. They'll be getting cash flow. The market would have come back. They'll be getting equity growth, and they'll kick themselves. How the hell did I miss out on this? And it's because they allowed fear to control their lives. So what I encourage you to do is, I've seen some of the other speakers, I don't know all of them, but I know some of them, there's some pretty good names there who know what they're doing, and come and get educated, come and learn and decide for yourself if property is the way you want to go as a side hustle. You don't have to give up what you're doing. You can do it very much part-time, create some extra income. And who knows, get to the point where maybe your property income replaces whatever else you're doing, and you might decide to then not do that and just do property if you want, or and enjoy the time freedom that property can give you. But unless you invest in yourself, unless you get the knowledge, it's never going to happen.
Great. We do have one more question from Michael.
Let
me read that. My question to Simon, please. After I found a motivated seller to apply this strategy, but the numbers are huge. It's a big HMO, got some exciting problems, existing problems. It's in a great area, but seems scary to operate that big numbers on my own. Would you advise to close that deal?
Okay, so it is, first of all, in this case, doing an HMO, you kind of need to understand how HMOs work. So if it's a really big deal, I suggest you wouldn't do a really big deal as your first one. If you've already got HMOs, you understand it, don't be scared by the size, just an extra naught on the end. Once you know how to do HMOs, you know how to do HMOs, right? That's the first thing. The other thing is, I don't manage any of my HMOs. I have other people do it for me. And so if you're in a good area, there probably will be an HMO specialist agent there who can do it for you. So go and meet them, check they know what they're doing, get some recommendations, etc. And then factor in the cost of them managing it for you, which means if it still makes money after all that, maybe it's a great opportunity. And here's the other point. If it's a big deal with big numbers, guess what? Most people, Michael, will be put off and they won't do it. So that seller will get more and more motivated because there are less and less inquiries coming in. So although it's scary, it could be a huge opportunity. But again, you do need to make sure you know what you're doing. What you don't want to do is take on something that you don't understand, because that could become a lead weight around your neck.
So yeah, thank you, Simon. So Michael, less competition, and this is one of the things that you teach on, on your seminars and on your training.
Yeah.
So when not a lot of people is looking at those greater deals because the competition is less, they are being scared purely by numbers. And Michael, as just Simon said, it's not about you running around unclogging the toilets and everything. It's just exactly, and these are the things you need to understand. This is the knowledge. You need to get your power team that's going to do it for you.
I was just going to say, if it is a bigger deal, it's bigger numbers, bigger profit, and thus you can afford to get other people doing everything for you. That's the key. So there's less competition, more profit. Obviously, I don't know what the numbers are, and you need to educate yourself to make sure the numbers do work, but it could be a great opportunity. So maybe get a bit of help, get a bit of coaching, get someone around you who kind of knows what they're doing to give you the confidence, Michael, to move forward. So I hope that helps.
Great, Michael. It's a great question, and for a lot of people I know, is actually finding a deal. It's the hardest bit, not the management, not the operations, because there are great systems to put in place. So it's actually finding a deal and making it happen. That's the hardest bit for for a lot of people. If you cut and again, if you think this is too much for you, you can package and sell it and still make money.
Absolutely. And the people you might sell it to are other people you meet at property training events like the one at the end of the month, who've got money, but they don't know how to find deals. So if a deal's not right for you, you can always sell it to someone else as long as it's a good deal. But guess what? If you don't go to property events, you don't get the knowledge, you don't meet the people who can sell to, so you're going to get stuck there just watching videos, wondering what on earth you should do. It's about getting out there, meeting people, getting educated, and taking control of your future, because only you can do that.
Simon, thank you so much. Michael also said, thank you, Simon. So great. And listen, guys, it was only a small sneak preview into what you can expect from this event. And just as you see, the power of networking. Michael might be just about to close the deal or sell it and make 10, 5, 15,000 pounds. You don't know, depending how good it is. It is a great big HMO in a great area. So this is what you can expect from the event and more. Simon, can't thank you enough to be with us tonight live. Really looking forward to to meet you again by the end of the month. And is there one final thing that you can share with us for all the audience?
Yeah, well, thank you, Greg. Thanks so much for asking me. And I'm really excited to be speaking on the 30th of September. It's going to be a great event. And I would say to people, look, investing on your own can be a very scary thing to do, particularly in a market like now. But if you get around other like-minded people, it's going to help you build your confidence, build your belief, build your knowledge. And you'll see actually there's this is the time when fortunes will be made, when most people are running for the hills, not knowing what to do, paralyzed in fear. For the bold and courageous, this could be one of the best buying opportunities of the decade. It would be a tragedy for you to miss this opportunity. So I'd really encourage you, come and find out what you can do, come and connect. It's going to be a great fun day anyway, but also give you really valuable information. So invest in yourself. As I always say, invest with knowledge, invest with skill. Thanks so much for asking me, Greg. And use my code Simon10 to get a discount off the price. I'm sure Greg will share the links with you to do that. Thank you so much, guys.
Thank you so much, everyone. Have a nice evening and see you soon. Thank you, Simon.